0.4% overnight.
Let's get the latest on what's moving commodity markets. We are joined by Peter McGuire from NG Farah. Peter, great to see you as always.
Good morning, Bridie.
Interesting too what we were seeing in those energy markets overnight. We had a lower forecast for oil demand coming through from OPEC, but also a lot of focus on shale oil, as we know, and what that's going to mean. And for the first time, well, the first of its kind, a report by the EIA in the US looking at the reserves, the actual amount of reserves that are there.
Well, exactly right. And, you know, when you think about, and good morning, Carson, when you think about new technology and how they've been able to go deeper into the Earth's crust and use that technology to retrieve the hydrocarbons and of course, shale gas, the reserves are really, you know, hitting the ball out of the park sort of thing. And I think what you're going to see is not only we're worrying about probably increasing demand, certainly over the years to come, but I wouldn't be surprised with all this extra supply that will be on the market and huge reserves, it will probably force the price down. And I would think that, I'm not suggesting you're going to see, you know, $50 or $60 oil, but give me an argument why you're going to see increasing price of oil. And with the US now going to be the largest as far as shale gas in the world with their reserves, I think it's going to be a wonderful for really mankind to, you know, have cheaper energy sources.
Just tell us about the EIA. I mean, heaven forbid they're not like our Treasury, over-optimistic one minute, having to backpedal the next. Because it seems like a very big margin of error between their call in 2011 on estimates and what they're telling us today. It's only a doubling. How does that even happen inside the United States?
Well, it's a great question. And look, we can't. When you look at analysis and when you think about what's you know, the true records and really dig down into the numbers, it's very hard to, you know, come up with an argument why you're seeing that from 32 billion up to around about the best point of, you know, the 58, 59 billion. So what impact that is, I'm sure that you're going to see further countries around the world have the same issues at hand. Algeria, with their natural gas, their numbers in a matter of a couple of years also tripled. So it's not unusual to see that because new technologies come into play, but also the amount of entrepreneurship and innovation that's gone into that energy sector over the last couple of years. Really, you've got, you know, new wells, new production techniques, and more money that's been allocated. So that's probably one of the reasons.
Just quickly on the Bank of Japan too, because we did see the Nikkei go below that 13,000 point mark again in selling early this morning. It's just back above it right now. But what did you think of the fact that, you know, markets are being gripped now by this view that perhaps central banks aren't going to be quite as aggressive in terms of easing, that they might start to pull back?
Yeah, look, it showed one thing, Bridie, for sure, which is market volatility. And when you see that the yen, it's had such a big run-up, if we use that as a case study, over the last, say, 5 to 6 months, it's been dramatic. And that was a wonderful glory trade if you're on the right side of the market. But, you know, it comes to an inflection point, like any market, that it's overshot to the upside. And we've seen that very evident with the Japanese, with the Nikkei 225. So it's come back dramatically from that 16,000 to 13,000, and that's being demonstrated across to the yen as well. So I think that money finds its best return, and I'm not really sure what the Bank of Japan's strategy is, but naturally it is to lift inflation up to that 2% point. It's going to be interesting to, you know, see how we get there.
Well, you'd agree, though, that if the volatility does ratchet down, that whole scenario you've just talked about could ratchet back up again.
Yes,
the carry trade is back in play.
Absolutely right. And I think that there's no doubt that the stock market was terribly oversold from 16,000, but some would argue that possibly it was terribly overbought. So volatility comes and goes. The commodity sector has certainly taken a lot of heat of that. All that heat's gone out of the market. It's gone into currencies, it's gone into bonds, and certainly into the equity market. So let's see how this Northern Hemisphere summer trades. And it's going to be quite fascinating to see where the end game is for the US dollar, because it's been nothing short of dramatic with our dollar.
It is raining outside the studio.
Yes, it is.
It's raining in the plains, is it not, in the United States?
Yes.
Tell us how that is good or bad for the soybean crop.
Well, the soybean corn are at their lowest planting levels in 17 years, so that's not a good sign, and that's been due to rain and, of course, cooler temperatures. But the impact, of course, is at the other end of the harvest when you go in and you can have early winter and that's going to possibly affect the harvest numbers. So let's just wait and see what happens there. But it's not a good sign for the US crop. Okay. So you just have to wait and see. You'll be over there soon. You'll be able to report directly for it.
Looking forward to it.
Yes.
Looking forward to talking to you as well. We have crashed the preps. We'll talk to you next week.
Thank you
you so much. Chief Market Economist, Australia's Pete McGuire from NG Farrow.
Coming up, we'll get some more analysis on that consumer confidence data, the lift that we saw. Matt Hassan from Westpac joining us next.
Ever pictured yourself at the wheel